Welcome back to this special edition of Inside Story and the impact in Asia of the global financial crisis. Joining us again are our guests, Jan Friedrich, Senior Economist at the Economist Intelligence Unit's Global Forecast, Leong Zi Hian, Economist and President of the Society of Financial Services Professionals, and Benjamin Pedley, Executive Director and Investment Strategist at LGT Investment Asia. Jan Friedrich, let me come back to you. The US is the biggest market for Asian exporters. At what point are we likely to see this crisis affect jobs for ordinary people and businesses in Asia?
I think it's already starting to happen. We already see an impact in export figures, and so people working in the export industry in many of the Asian economies are already feeling tighter job conditions. Job growth is going to slow. That's going to certainly be something going forward. That will have repercussion on investment growth, will have repercussions on new hiring decisions, will have ultimately then also have repercussions on spending power of ordinary consumers on the street.
Leong, what do you think the human face of this crisis looks like? I mean, how does it impact on jobs, on mortgages, on the cost of food, the cost of fuel?
Well, I think in many Asian countries, a lot of investors have lost billions of dollars, particularly in like structured products that were linked to some of these, asset problem companies. And all this is going to filter down. People will cut back on spending, and as Jan said, there may be cutbacks on business, on jobs. So maybe people in Asia have to start to tighten their belts or something. Yeah.
Benjamin Pedley, does the ordinary man and woman on the street in Asia look at this and say, "Oh, hang on, this is happening thousands of miles away. It's got nothing to do with me"?
No, I don't think they do, because all they need to do is look at their local stock market and see how it's performed over the past few months. And the negative wealth effect that we talk about from stock markets, that is, if your stock portfolio is down, you feel poorer and you spend less. That's not just limited to the US, that's everywhere across Asia as well. I think the other thing we need to look out for in terms of the Asian consumer is that this began with a housing crisis in the US. Now, if you look across Asia and what was happening about a year ago in some of the housing markets like mainland China and also Singapore, house prices were up substantially. I believe the next wave of this crisis in terms of the effect on Asia is going to be significant further falls in house prices in major economies across the region. And when that starts to occur, I think we could see a second wave of credit problems for Asian-based institutions, not because of their exposure to the US, but because of their exposure to mortgage securities in this part of the world.
Let's just stay with that wider impact of what's going to happen here in Asia. Jan Friedrich, there's often been talk in Asia about decoupling from the US, that's to say being less dependent on the US for Asian exporters and so on. Will this crisis reinvigorate that idea, do you think?
Can I just come back on the property story, though? I think I very much agree with you, but I think it's also very important to understand that it's not just a US phenomenon, the property market boom. It's not only an Asian additional boom. This was the longest, the biggest, and the most synchronized property boom worldwide ever. And it's very likely that all the countries that participated in this boom will see their declines. Many of them are already in the decline, but many other of them are still in the early stages. Remember, in the US, the downturn started 2 years ago in the housing sector, so it can take quite a long time to actually feed through to the economy. And of course that will then have repercussions back to Asia if also Europeans are having big problems with the housing markets, if other parts of the world are having problems with the housing market. That affects global demand enormously, and also global demand is closely tied with Asian demand.
Leong, what about the point of decoupling then? Is that a way forward for Asian markets?
Well, with globalization, I mean, how do you decouple? I think the connection will get even thicker as we go along. And when you talk about the housing crisis, I think the problem is this: if you look at Fannie Mae and Freddie Mac, they were started to help poorer Americans to own homes. Now, in many Asian countries, the governments actually went one step further. They not only provided the loans to help the poorer Asians to own homes, they actually built the homes. So the bubble may actually be bigger.
In terms of expanding on that issue of growing the markets in Asia, let's just talk briefly, Benjamin, about China and India, two of the big economies. Monetary policies in those countries seem to be tightening, even though we've seen inflation in China drop over the last couple of months. But, I mean, how do you get people in China and India, millions of people, to spend more and perhaps save less?
I think it's going to be very, very difficult because what we've seen of late, we did see that one-off interest rate cut from the Chinese amidst all the problems last week to try and stimulate the mainland economy and also try and encourage some lending. But I think let's look at the Chinese market for a start. The Shanghai Composite Index peaked at about 6,000. Last week we were trading down as low as about 1,800. So the Chinese consumer, that small pocket of investors that have invested in the stock market in China, have been burnt terribly. So I think it's going to be very difficult in the near term, first of all, for them to get back into the market. And I think also they will be encouraged to put their money back in the bank rather than go out and spend it because of the pain that they're experiencing right now. And I think if you look across China, I would say that one of the refuges, if you like, as an investor into mainland China has been in the banking system. And I would say that the next shoe to drop may well be a sharp increase in non-performing loans, a la the Asian crisis, in those institutions. And I think that could create some significant credit problems on the mainland. And if that occurs, I think it'll be very, very difficult for policymakers to do too much to encourage people to go out there and continue spending at the pace they currently have been.
Jan Frederick, how do you think Asia's financial policymakers will go about stimulating the region's economies? I mean, is the period of tight fiscal policy over, and are we now about to see a shift in policy towards boosting the economies?
I think that really depends on the specific economies. Some of the economies, there are basically two layers. Some economies really have seen excessive lending growth in the past couple of years, and they do need an adjustment now, and they do need some continued relatively tight monetary and fiscal policy. And some others where the excesses haven't been quite so strong, and to some extent I would count China in the latter category. The excesses, you could talk of a lot of overcapacities, but that's more of a long-term problem. And fiscal policy in China would be very effective. Monetary policy is unlikely to be very supportive, to be a good instrument, but fiscal policy is in a very strong position to give significant stimulus so that growth will slow significantly, but to a level that would still be dreamlike for pretty much all the other countries in the world.
Leon, let's just look to the future if we can. I mean, if the US economy does experience a more protracted downturn, if we don't see that light at the end of the tunnel, what does that mean for Asian markets and the Asian economies?
Well, we have a double whammy in the sense in Asia. We have rising inflation. Many countries are at 20+ year highs. And then now you have this big financial crisis. And I think there will be some time before the markets will get back to where it is today. I understand that in one country, just in one province, 80,000 companies have closed so far this year. So we are looking at a situation where governments may have to do much more, and they're already pretty stretched today trying just to fight inflation.
Benjamin, I mean, Asian investors may have taken a hit in the last week or so, but I mean, are foreign investors likely to start looking towards Asian markets to do business?
Well, I think undoubtedly they will do, because I think that Asia will continue to be the fastest growing region in the world, even amidst this global economic slowdown. I think the problem is that what we typically see during periods of economic instability and for that matter geopolitical instability, you typically see the big investors around the world, particularly the US and Japan, the world's two largest economies, they typically take their money back on shore. So I believe that there will continue to be a little bit of a reticence on behalf of, say, US companies, European companies, to invest aggressively in Asia during this slowdown, because what you typically see is caution during troubled economic times, and that does not normally involve investing in what they would deem to be foreign and not all that familiar markets. So I think that we may see some investment flowing to Asia by default, but I wouldn't expect that these institutions in Europe and the US to be investing aggressively just because they have their balance sheet problems to worry about of their own.
Jan Frederick, is it all doom and gloom? I mean, how do you see Asian markets benefiting from this crisis? I mean, as Europe and the US perhaps start shrinking, can Asian markets and investors step into that space?
I find it very difficult to see any way that Asia can benefit from this situation. Asia is enormously dependent on US and to a significant extent also European demand. And so the impact is all negative from the crisis. The one positive thing is that, of course, weaker overall demand for all kinds of imports from the US and Europe also means lower commodity prices. And for a region for which commodity imports are extremely important, energy imports are extremely important, that is a significant positive. But it doesn't outweigh the negative side from the demand side.
Benjamin, you wanted to make a point here,
I could just jump in there. I think that's a very good point. I think also we need to take away from this that if you're a Chinese policymaker right now, and you were considering embarking on capital market reforms at the urging of the US, I think you have the perfect excuse to do everything but. So I think that they will be taking some solace for the fact that they have taken a very gradual approach to opening up their capital markets.
Okay. All right, gentlemen, we have to leave it there. Benjamin Pedley, Leong Zi, Hyun and Jan Friedrich, thank you all very much indeed for joining us on the programme. And thank you so much for joining us here on this special edition of Inside Story. We, of course, welcome your comments and your suggestions. Please email them to us at insidestory@aljazeera.net. From the whole team here in Asia, goodbye for now.